S&P and NASDAQ, new, fresh, all-time highs today. Not up a lot. Dow finished down today. Pretty boring day in the market. Powell's on Capitol Hill. He got berated by Elizabeth Warren. And I love how she's like, you said this. He's like, no, I didn't. She's like, yes, you did. She's like, here's the quote. And then she repeated what he said. It was not what she said before. She implied it, but here's a clip from that.
You're the regulator who said, trust the banks to self-regulate so we can avoid another financial meltdown or another bailout. And you don't know if they did or didn't do that?
Well, you make it's a very, very specific, narrow question you're asking about.
Because it's something a regulator should do. You think the answer is 10 out of 10? The answer is 0 out of 10.
Yeah, I doubt that.
Go back and look, because we've looked at their statements on this. Another thing the proposed rule would do is require the banks to consider flat out banning bonuses and bonus pay for executives who took risks that threatened the stability of the bank. So let me ask you this one, Chair Powell, in the 6.5 years since you said trust the banks to regulate themselves, how many of the 10 biggest banks now have policies that would require them to flat out deny bonuses to executives that have engaged in inappropriate risk-taking?
I don't know the answer to that. By the way, I never said trust the banks to regulate themselves.
I'm sorry, do you want me to go back and quote you again exactly?
Trust the banks to regulate themselves?
When you say, I expect that the banks will have in place compensation plans that do not provide incentives for excessive risk-taking.
Right, pursuant to the guidance that we issued in 2010, which is quite detailed.
And you have not issued a guidance since you made these comments, since you became chair.
Now, obviously, inflation's still on everybody's mind, not like it was last year. The Fed is still on everybody's mind. We're 7 months away, past the point where everybody thought we'd have 6 or 7 rate cuts by the end of 2024. We haven't even had one yet. But as you saw in yesterday's video on this channel, 78% chance, people are saying, for a rate cut come September, which is a pretty high probability. Now, guys, I don't want everybody believing you have to attach yourself to all the news. 99% of this new stuff is garbage. What I'm trying to teach is a process to learn. Now, when it comes to the Fed, no one cares what the Fed's going to do. I shouldn't say this. No one should care. Economies are going to go up and down. If you're a good investor, if you have a good process, and you have the stomach for it, you're going to do well by buying good companies at good prices. 99 out of 100 times when you buy a company, it's going to go down in price. I don't know if it's really 99 out of 100 times, but the point is you're not going to get a stock at the bottom. Get that out of your brain. It's about having the ability, the stomach, to be able to see a stock that you love fall, reassess it, and say, the fundamentals are still the same. I'm going to buy more. That's what we're trying to do here. Now, Jerome Powell was getting attacked by Elizabeth Warren for banking. Then John Kennedy, the senator from Louisiana, was basically on an anti-Biden rant, which was funny to me. And I just saw that the steam to remove Biden from the ticket is actually losing steam right now, which is kind of interesting. I don't know how it's going to affect elections. Frankly, I could not care less, but a lot of people do care about that. Now, as you can see from this heat map today on the S&P, Microsoft down 1.5%, NVIDIA up 2%. Guys, when the big companies, they're driving all the returns here. You got to be okay with that. You got to be careful sitting there and thinking that the market in general is up and great. It's been the big companies driving this. Visa's even. JP Morgan reports later this week, up 1%. Let's see some of the big losers here. Starbucks down 2%. Oh, I like that. I own Starbucks. I'd like to see it further down so I can buy some more. Target down. I own that one. Costco about even. Meta about even. Google about even. So guys, all over the board, not much going on in the markets this week. That's okay. We don't have to have a lot of news all the time. But just remember, valuations stay high. Every reliable metric in the world shows that valuations are high. It doesn't mean you stop investing. It just means be ready for the volatility. That's okay. The great time to start learning a process for investing is now, especially as valuations are high. That way, when valuations do get better, you are able to pull the trigger. I look at it and think, a lot of people are talking about housing costs. Housing has been driving inflation, and that is problematic for a lot of people, especially people who want to buy buy homes. But the one thing I'm starting to see, and I'm not going to tell my managers upstairs this, is rents are starting to decline. Why? Supply and demand. That's what I always talk about with real estate. People say, go buy in a city that's growing in population. That's not the full equation. How many units are they putting on the market? If you have a city that's gaining 500 people a day like Dallas, but you build apartments to house 1,000 people per day, you're going to have a supply issue. You're going to have rents declining. Now, if you go to a market like Cleveland, we have rents just skyrocketing. Why? Because not many people are building Cleveland, and because not many people are moving here. So we're able to see rents go up and up and up with inflation. So don't always think that just because one thing happens, it means there's going to be an immediate reaction. There's a domino effect along the line. Just like a few years ago, when rates skyrocketed on home prices, skyrocketed on mortgages, everybody thought prices will continue to go up. And I said, and I'm not saying this to be like, oh, I was right. Inflation can still keep houses high. You can go look at our past videos on the main channel. I talked about this. I talked about how let me show you the exact numbers. I talked about how in 1976, the average interest rate was 9%. And in 1984, it was 13.5%. So that's a 50% increase in rates. The average home went from $32,000 in 1976 to $82,000 or $84,100 in 1984. This is why if you're going to buy a house that you're going to be in for a while because you need to, yes, it's more expensive than it was in the past, but that's the reality of it. And if you can afford it and you want to live there, go do it. You don't know where home prices are going to be. You don't know what's going to happen. Inflation is the friend for home prices. Don't think just because we had a great recession 15 years ago and home prices fell, that's going to happen again. Now, guys, the reason I want you to follow our channel is I do think the next 5 or 10 years are going to be a lot different than the previous 5 or 10 years. And that's going to make a lot of people out there very scared. But the people who watch our channel are not going to be scared. The people in our community will not be scared. They cheer on lower prices. They want those lower prices. Why? Because investing is one of the few areas where lower prices are feared. No. As Morgan Housel says, every past stock market crash looks like an opportunity. Every future one feels like a risk. They're all opportunities. That's how I want you to perceive it. Warren Buffett said, hey, in the time I've owned Berkshire, the stock has fallen three times over 50%, around 50%. I've never felt poorer because I knew what the stock would be worth. And that's very key. That's why we use this community and tools. I want you to be involved in this channel to be able to understand that when stocks go on sale, it's an opportunity for you. Now, is it easier when you don't own the stock to see it go on sale? Of course. And once you buy the stock and see it go down in price 20, 30, 40, whatever the percentage is, it can be tough. I get that. But that's why we fall back on the fundamentals. Peter Lynch always says, everybody has the brain power to be an investor, but very few have the emotional stomach to be an investor. And that's what's key. Now, the beauty is you have YouTube. You have this opportunity. You have the community here of like-minded investors that you can join and be around people who all discuss the same things in the same way. Do they disagree? Absolutely. That's the beauty of it all. But the mindset is the same. That's what I'm trying to frame here for you. I want you to enjoy hearing the Fed talk. I don't want it to change the way in which you invest. I want you to enjoy hearing about economic data. I don't want it to change the way in which you invest. You still need to be what's called a bottoms-up investor, which means you worry about a company on the lower level. How's the company operating? How are the people in the company operating? And you make decisions that way. Every company is going to have ups and downs. Look at Tesla. Tesla was not really written off, but it was not as popular as it was before. And now it's resurging. And now everybody's like, Tesla's the best thing ever. NVIDIA is experiencing that now. There will be a time when people hate NVIDIA. It's probably not going to be this year or next year, but somewhere down the road in the future, there will be a time. Just like Cisco and Intel were eventually hated, and they were the stocks back in 2000, and they haven't hit their 2000 peaks yet. So just be aware of that. Earnings kick off this week, guys. So I need you to do me a favor, like I asked for before. Subscribe to this channel. Make sure you get the notifications so you can watch our earnings releases. They're a lot of fun. I appreciate your time.